Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday as we say on the island, April 24th, 2020, and this is the daily report for gold and silver, our weekend review, and what a week we have seen. Realize that over the last 5 weeks, 4 of them have resulted in higher closing. If we take a look at mid-March pricing to current pricing, we've got about a $300 gain. So we are absolutely in rally mode. We finished up the day just above 1740. We've got a couple of levels above that, with the major one at 1788, which is the all-time high for the year, and then just right above it, the brass ring, of course, at 1800. My sense is that with the massive amount of fiscal stimulus, as well as quantitative easing and asset purchase allocation by the Federal Reserve, gold really has nowhere to go but up, because all of these actions are devaluing the dollar. Let's take a look at our price board and then to our technical studies. Although in our opening letter we did state that gold closed higher on the week, but fractionally lower on the day. As you can see, that was written prior to the inserts, because we are now looking at gold trading up 30 cents at 1745.70, a very, very fractional gain. The opposite, though, is true when we take a look at spot, down 265 at 1727.40. Platinum also lower on the day, 781.70. Palladium lower on the day, down $25 at $19.76, and silver fractionally lower. I'll put it in the unchanged column actually, currently at 15.35.5 cents. And that's all with some tailwinds from dollar weakness today. Although it's still above 100, it did come down about 0.25% on the day. Equities as a whole did trade higher, 1.7% gain in the Standard & Poor's. Composite had a 1.65% gain, and then lastly the Dow Jones Industrial gained 1.11%, total of 260 points, close at 23,775. Let's take a look at our technical studies. The first chart that we do want to look at on today's show is a very short-term candlestick chart, each candle representing 15 minutes in time. You notice I have a couple of horizontal lines. They're simply matching various stops. In the case of this at 45, the close of today's candle, when we look at 53, we can basically come across and we can see a series of tops that came in right in this area. And then, of course, this one up at 64 represents this top. Now, to give it more weight, we really need to compress that chart, and I'll do that right now. I've converted the shorter-term chart to a 480-minute chart. And when we look at the various lines that I've put in at 64, 53, and 45, what we can do is kind of follow the dots. So when we start with this first lower line right here that comes in just above 20, we can see that that was the bottom that came in today. It also matches this area where it was acting as resistance. Here it was acting as resistance. And then through this area right here on the 12th, it did act as support. When we move to our next line, and that is the line where we closed today right here at 45.70, if we carry this straight across, what we will see is a series of areas of resistance right here, as well as another top acting as resistance that came in right here. Now, above that, these two lines, 53 and 64, are representing our current short-term minor level of resistance. We are looking at a daily Henkin Ashi, or Japanese average candlestick chart, and what we can see is that over the last 3 days, we have had 3 consecutive green candles. However, the first in the series had this lower wick as well as an upper wick, which means that we had a pivot or a transformation from bearish to bullish. The following day, meaning yesterday, we had the absence of wick, a decent but not large body size, and a contraction in body size today. So while the trend could definitely still be intact, we might in fact be experiencing some sort of consolidation before moving to higher ground. Because in my opinion, it is not if, but when we will see gold challenge the former high at $1,788 and inevitably challenge $1,800. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. Stay healthy. We'll talk to you on Monday for the next daily update and review. Bye-bye.